Imagine a company that's trying to do, well, almost everything at once. Building things, sure, but also capturing CO2, boosting local health, keeping finances super stable.
Mm.
It's quite the juggling act. Welcome to the deep dive. This is where we take a whole load of corporate documents today. It's filings, presentations, audit reports from JK Cement Ltd. And we pull out the key stuff for you on Goal today. Cut through all that corporate speak, and help you really grasp what's important about this major player in the cement game. So for this deep dive, we've got the proceedings from their latest AGM. That's the 31st annual general meeting. We also have their Q1 FY26 investor presentation, so fresh numbers.
And that crucial security cover certificate for their debentures.
Yeah.
Basically, proof they have the assets backing their bond.
Exactly. So by the end, you should have a really clear picture of JK Cement's performance, where they're heading strategically, their financial health.
And maybe surprisingly, how a company in such a heavy industry is tackling things like sustainability.
Okay, let's kick things off with that 31st annual general meeting. It was held virtually July 18th, 2025. Wrapped up pretty quick, too, under an hour. Finished by 11:44 a.m.
Yeah, that's efficient, right? Shows how companies are adapting, video conferencing, all that tech.
And they followed the rules. Key board members, auditors were there. Mrs. Sushila Devi Singhania, the chairperson, she presided virtually from Kanpur.
Shows it works. Remote governance in action.
So they had 6 resolutions, all passed with the required majority. Things like adopting the audited financial statements for FY 2024-25
Standard stuff, but important.
and confirming the dividend, Rs 15 per share for that year.
Good news for shareholders.
But here's something a bit more, well, interesting. Most votes were like 99.99% for overwhelming.
As you'd often expect, yeah.
But 2 resolutions. These were about the reappointment and continuation of a director, Mr. Paul Heinz Hugentobler. He's about 76.
Yeah.
These saw about 12% against votes, 12.04% against reappointment, 12.18% against continuation. Now, they still passed easily, but
Yeah.
12%, that feels noticeable.
It is noticeable. It's not a rebellion, obviously, but it's definitely a signal. It suggests shareholders aren't just ticking boxes.
Right.
Maybe concerns about age, tenure, governance focus. Something specific prompted that level of dissent. It tells you the shareholders are paying attention.
And people did get to ask questions, right? 6 registered speakers, 1 from the Q&A box.
Yeah, and the deputy MD and CFO, Mr. Ajay Kumar Sarogi, addressed them all. So the engagement channel is open.
So understanding the AGM, it's not just formality. It gives you a feel for the company's governance, shareholder mood, key decisions getting locked in.
Exactly. It's like the company's annual checkup, seeing how things are running internally.
Okay, so that's the governance side. What about the actual business? Let's turn to their Q1 FY26 investor presentation. What are the numbers telling us?
Right, the numbers. So consolidated revenue from operations was 353 crore. Profit after tax, the PAT, 324 crore for Q1 FY26. But if you look standalone, which often gives a clearer operational picture, the EBITDA, that's earnings before interest, tax, depreciation, amortization, was 674 crore. That's up a really strong 41% compared to the same quarter last year.
41% year on year. Wow.
Yeah. And net profit, standalone, was 336 crores, up 66% year on year. Now, these did dip a bit from the previous quarter, Q4 FY25, but that year-on-year growth is significant.
Definitely. What about per ton? Any improvement there?
Good question. Yes, their EBITDA per ton also saw a healthy jump. It's up 133 per ton compared to last year, reaching a 1,247 per ton. Shows better margins, better efficiency underlying it all.
So what's driving that? Just selling more cement?
Volume is a big part of it, yes.
Yeah.
Grease cement sales volume grew 15% year over year. They pushed into the central region, into Bihar markets more.
Okay.
White cement and wall putty also grew, 8% year over year volume growth there.
Yeah.
But it's not just sales volume, they're also heavily investing in expansion.
Right, the expansion. What does that look like? New factories?
Pretty much. Major projects are set to come online by December 2025. There's a big 4 million tons per annum MTPA gray clinker unit at Panna. That's already 76% done.
4 million tons, that's substantial.
It is. Plus 3 MTPA of actual cement capacity across Panna, Hamirpur, and Prayagraj, and another 3 MTPA grinding unit in Bihar. So yeah, serious capacity boost coming.
And it wasn't just cement, you mentioned wall putty earlier.
That's right, they're building a new wall putty unit near Nathwara in Rajasthan. 6 lakhs MTPA capacity. Should cost around 195 crores, aiming for completion by FY27.
Why wall putty specifically?
Market demand, basically. They see about 9% annual growth CAGR in that market and need the capacity, especially for peak seasons. Right. Diversifies their product mix too.
Makes sense. And there was an acquisition, too.
Yes, good point. Just recently, June 6, 2025, they acquired a 60% stake in another company for about 150 crores.
Okay.
That adds a bit more capacity, 0.26 MTPA clinker, 0.42 MTPA cement. But crucially, it expands their footprint in Jammu and Kashmir. So it's strategic expansion as well.
So lots of growth, lots of investment. But what about the costs? That always bites in this industry, right?
Always. It's a constant balance. Pet coke, which is a key fuel, saw prices tick up in June 2025, hitting about $120 a metric ton. And because they're reaching further markets, their average delivery distance, the lead distance, has increased. It's now 436 kilometers.
That's quite a distance.
It is. And it means higher freight and forwarding costs compared to the previous quarter. It's, the price of expanding your reach.
Okay, so that gives us a good picture of the operations and financials, but you mentioned earlier it's not just about profits anymore. What about ESG, environmental, social governance?
Right. And JK Cement seems to be taking this quite seriously. On the environmental side, their CO2 emissions are at 516 kilograms per ton of cementitious material. Their target is 465 kilograms by FY30.
Ambitious. How are they getting there?
A big part is green power. Their mix is now 52% green energy, up from just 19% back in FY20. They're aiming for 75% by FY30.
That's a huge jump.
It is. And they're also 4.7 times water positive.
Yeah.
So they're putting back way more water than they use.
But cement, CO2 is inherent in the process, isn't it? Beyond just power sources.
Absolutely.
Yeah.
And that's where things get really cutting edge. They're involved in this pilot project supported by the government.
Oh.
Yeah, with the Ministry of Science and Technology, CEST, NCCBM, IIT, Rookie, quite a few partners. They're setting up a pilot plant to actually capture CO2, about 2 tons per day.
Capture CO2?
Using something called an oxyfuel-based calcinor technology. And the plan is to use the captured CO2 in making lightweight concrete products.
Wow.
And this is apparently the first such initiative for the cement industry that's got direct support from the government of India. It's pioneering stuff, trying to prove the tech works for potential scale-up.
That really is tackling the core issue. Very interesting. What about the S in ESG, the social impact?
Also quite significant. Their programs have reached nearly 300,000 people, directly and indirectly. Health is a big focus. 45% of their CSR spend, about 5.17 crore just up to June 2025.
What kind of health initiatives?
Big things, like funding a 500-bed super specialty hospital at IIT Kanpur, also distributing medicine and nutrition kits for TB patients, very direct community support.
And other areas?
Education gets about 29% of the spend, community development about 26%. This covers everything from cattle breeding programs, supporting cricket academies, to building roads, toilets, installing solar lights. It's broad-based community investment.
Okay, impressive on the E and the S. Now, the G often ties into financial stability too, right? Especially for bondholders. Let's talk about that security cover certificate.
Yes, the bedrock. This was an independent auditor's report dated July 19, 2025. It basically confirms they're meeting all the promises, the covenants attached to their listed secured debentures.
So how secure are those bonds?
Very secure, based on this report. They have 75 crores outstanding from an original Eurocrore issue, and they're exceeding all the required financial ratios by a comfortable margin.
Like which ones?
Well, the debt service coverage ratio, DSCR, it needs to be at least 1.10 times. Theirs was 2.33 times.
So they generate more than double the cash needed to pay their debts.
Exactly. Huge buffer. Then there's the total outside liabilities to total net worth ratio, to LT&W. Max allowed is 4.00 times. Theirs is only 1.67 times. So relatively low debt compared to their equity.
Very conservative.
And the big one, security assets cover. This compares the value of assets pledged as security against the value of the debentures. It needs to be at least 1.28 times.
Okay. And what was theirs?
On book value, it was 5.92 times. On market value, it was 9.29 times.
Wow. So nearly 6 times cover on book, over 9 times on market value.
Precisely. The assets backing these bonds are worth vastly more than the debt itself. The security is primarily fixed assets at their gray cement plant in Mudapur, Karnataka, with some temporary charges elsewhere while paperwork gets sorted.
So what this tells you, the listener, is that from a financial stability perspective, particularly if you were holding these bonds, the position looks incredibly robust. Low debt ratios, massive asset cover.
Yeah, it paints a picture of strong financial health underpinning all this growth in ESG activity.
Right. So We've covered a lot. We looked at the AGM, the governance signals there. We dug into the Q1 performance, the strong growth, the big expansion plans.
Balanced against rising costs, of course.
True. And then the really impressive strides in sustainability, that pioneering CO2 capture project, the extensive social work.
All backed up by those solid financial foundations and security cover we just talked about.
So summing it all up, it leaves you with a thought, doesn't it? You've got JK Cement pushing hard on capacity expansion, innovating with carbon capture, committed to social welfare, and financially very stable.
It's quite the combination.
So the question maybe is, how might this kind of integrated approach, blending growth, environmental action, social responsibility, how might that become a sort of model for other heavy industries, especially in growing economies like India, as they try to balance development with sustainability?
Yeah, it definitely makes them a company to watch, doesn't it? Seeing how they navigate that path forward.